Whole life or term life insurance, which one is right for you? If you're shopping for life insurance, you've probably been hit with that question, term or whole life. Most people get sold on price, but they're not told the long-term strategy behind either opinion. So we're going to break it down so you can make the right move based on where you're at and, of course, where you're going. So let's get into it. Term life, according to some folks, it's low cost and temporary coverage. It's like renting. It covers you for a set period of time, 10, 20, 30 years, and then poof, it's gone. It's cheap, but there's no cash value, and most policies expire before they're used. I guess that's a good thing. Great for short-term needs like income protection while kids are still young. So let's talk about this a little bit. Yeah, they do expire 99.9% of the time worthless because people are typically healthy enough, according to the actuaries, that they're going to give you a 10, 20, 30-year model for it. But by the time you get past that term, it gets very expensive for you to keep it. So a lot of folks cancel it because they can't afford it because it goes from, and I'm using hypothetical numbers, $500 a year for 20 years. Year 21, it's all of a sudden it's $5,000. Year 22, it's $15,000. Year 23, it's $35,000. So it's designed for you to lapse that policy or stop paying at some point. So now as we talk about whole life insurance, which is more expensive, lifetime coverage, living benefits, whole life lasts your entire life, and it builds cash value, money you could use while you're in your working years and alive. It costs more up front, but over time, it becomes tax advantaged. It's an asset that you can own and control. So check it out. When we talk about cost more up front, you're moving money from one side of the balance sheet to the other. The real question is when you sit down with an agent and they design the policy for you based on a cash flow analysis. What is a cash flow analysis? How much extra you're paying on your mortgage? How much extra you're paying on credit cards? How much extra or are you overpaying on your homeowners or your auto insurance? How much are you saving every single month? Are you going past the match on your 401k? All those little things matter when it comes to where your money's going out every single month. If you sit down with the right agent and they do a full cash flow analysis and they're able to find some extra cash flow, then the question becomes, how do they use that cash flow inside your whole life policy? In other words, you'll hear people say, and it means something, with no additional out-of-pocket cost, our goal and outcome is to create the optimal amount of wealth. Once again, I'll break that down privately whenever we speak. The point is when you do a full cash flow analysis and it's scientifically proven how you deploy that money in other directions, well, then the cost of insurance becomes actually nothing when it's all said and done. Okay, and as I step through this and we talk about another item here, the agents out there that get 5, 6, 7 appointments a month, they're not going to like what I have to say. The truth is, if they're not working enough cases, they get what we call commission breath. And as a result of it, because they could be a slave to the mothership, in other words, a captive agent to a specific carrier, they're going to push a product for them that makes the most sense. But they're also going to push something that's easy to sell, which is term insurance, because once again, it doesn't cost a lot of money. It's not a painful conversation. They don't talk about how wealthy families use whole life to build private banks, fund investments, and protect legacies. The structure does matter, folks, because at the end of the day, when you look at how these policies are designed, it's based on your age, it's based on your health rating, it's based on all these other factors. And if you want to be able to maintain that wealth and use these tools like the Rockefellers did, it's important you understand exactly how it works. So what do I mean by all that? Whenever you get a term policy, by the way, in some of our blended whole life policies, we have term because we know that we want to jack up the death benefit during the working years, convert that assurance over time, but also be able to leverage that money inside that policy while you're in the working years for other alternative investments. It's important to know the difference, and it's not just selling insurance. It is how do you use the insurance as a tool in the overall financial mosaic. I always want to know which one is right for you, and it's an important question if you're young, healthy, and on a tight budget. Term insurance does make more sense for the short term. But if you're really building wealth and the businesses are taking off and you're protecting assets and you're thinking about legacy, a properly structured whole life policy can be a core part of the financial mosaic, the financial strategy, the centerpiece that can help create that 60, 90, 120-year wealth model, just like the Rockefellers did. If this is resonating in your heart, if it makes sense, if you're feeling like you want to take a next step, if you want help to choose the right policy, and if you're serious about making the right move, not just buying what's the cheapest, click the link below to book a free consultation with me or my team. We're going to break it all down based on your age, income, goals, objectives, and help you build a strategy, not just to buy a policy. And if this helped you see things differently, do me a favor. Like the video, drop a comment, share it with someone who needs to hear this. And if you want more real talk on money, insurance, and legacy building, hit the subscribe button. We got a lot more video coming your way.